traders at UBA say that the bond market is closing the week with mixed sentiments and a handful on interest seen on the 2027s and 2034 papers. For the T-bill side, demand is seen on the short to mid end of the curve with improved supply seen on the long end. Kenneth Onuoha, team member, assets and liabilities at UBA, joins me now for market sentiments this week. Thank you so much for your time today, Kenneth. Let's just first get a wrap of how this week has played out so far.
All right, thank you so much, Kenneth, for having me. The week has been pretty quiet. It's been one that has been plagued with, of course, the fact that there's been this liquidity squeeze in the market. So I'll just start off from the money market side of the report. Now, so the week started off with a net debit balance of about, system liquidity, of course, opened with a net debit balance of over 549 billion. We saw how that has seemingly improved as we moved from Monday up until today. Of course, we remember that the week was occasioned by a May Day holiday on Wednesday, but in between, we've seen a consistent reduction or improvement in the system liquidity levels. As at close of business yesterday, system opened with a net debit balance of 74 billion. Now, I'd like to add that the reasons for the increase in the system liquidity is largely due to, first, there was a 53 billion inflow into the system owing to bond coupon maturity, 2032 bond coupon maturities, bond coupon payments. Of course, there was also an OMO bills maturity for about 43 billion. In between as well, there was a swap maturity of over about 110 billion. And then, of course, there was as well a bills rediscounting, of course, of about over 100 billion. So all of this contributed in helping to alleviate the stress on the liquidity situation. So that naturally cost OPR and overnight rates to trade at about 27.63% and 28.42% respectively. Moving on quickly to the fixed income side of the market, we observe that the treasury bills particularly, we have seen a lot of interest on the short to medium term paper, buying interest on short to medium term papers, but primarily the major focus where activity has been seen a lot has been on the April maturities on the long end. We've seen a lot of supply on that side, of course, largely because of the yield on those maturities. That's pretty much what has happened on the treasury bill side. On the bond market side, what we can say clearly is the fact that the bond market has been pretty quiet. Yes, we've seen mixed sentiments, however, owing largely to the improvement in the liquidity situation. We have seen a lot of interest in the 2027s and 2034s, and the reasons are not exactly far-fetched. 27s and 2034 papers are pretty much the highest yielding instruments or papers on the bond side currently in the market. So expectedly, that's where the interest has been. They are currently trading about 19% levels from the 20% that it actually printed at the last auction. The 2027 actually printed at 19.94, while the 2034 so actually printed at about 20% levels at the last auction. Interestingly, just before we came on air, we did observe also that the DMO released the bond issuance calendar for a revised bond issuance calendar for 2020 for the second quarter. And what is interesting to note, however, is the fact that we have seen the 2034s that used to be constant in the previous auctions being replaced by 2033s. So we have a new 2033 paper that has come to replace 2034. So summarily, that has actually what has actually happened in the market.
All right, a new paper in the markets now, but let's take you back to the liquidity situation, and I'd like to get what your expectations are for next week and how you think that space is going to look like for the rest of the second quarter.
Oh, well, so we do know that the guidance from the CBN is to ensure that the liquidity situation is always contained. So we do not expect to see a very aggressive increase or change in the liquidity situation. If anything, there's an home auction coming up sometime next week, where on the 9th of May, where we will see about 179 billion being put up on offer. We expect, of course, that would also take away from the liquidity in the system. We also expect a bond auction sometime on 13th of May, where about maybe give or take about 600 billion may actually leave the system. So we do expect that it will continually remain tight for the now, except of course CBN intervenes. But at the moment, it is really there's a squeeze. But we tend to see the improvement, but there's a squeeze on the liquidity system situation in the system at the moment.
But I'd like to get your thoughts around what we can expect. It's a new month now. And looking at how the market has fared last month, your thoughts around what we see in terms of inflation printout, and how the likely responses from the monetary policy authorities going forward.
Okay. Of course, with MPC sometime 25th or thereabout of the month. It's still far. Still early days, I'd like to say. But we expect that if you have noticed, the rate of growth of inflation has seemingly decreased, right? From the 28.92 in December to the 33.2 that we are currently. The rate of growth month on month has commonly shown some form of improvement. The rate of growth is slowed down compared to what we were seeing before now. It shows that the efforts of the CBN, the consideration of the CBN, is actually reaping rewards. We expect to see that in the coming days, when the inflation report results are released, we do expect to see some measure of calm. The continuous trend will continue. We don't expect to see any sudden spike in the inflation numbers in the coming days. But of course, that remains to be seen.
All right, then. Quite an interesting speech to watch out for next week. But thank you so much for your time today. I've been speaking with Kenneth Onuoha, a team member, Assets and Liabilities at UBA.